Hi there, welcome to Kneppy Invest and welcome to the 15th of May 2025. You might be sensing a bit of dejection in my voice, and the reason you might be sensing it is because this is take number two. Yes, take number two. There is a reason why the time is now 4:26 p.m. because on take number one, I forgot to hit the record button. Now, on my old iMac, there will be a voice that pops up saying, "Hey, you're recording." On this new iMac, you don't. I don't get that, and I usually don't forget to hit the record button, but today it happened. I knew this was going to happen eventually. A lesson learned. You do see a little bit of a flashing light, flashing red light, but it's very small. And that does show you that the session is being recorded. And I completely missed that on take number one. And then when I finished my session, my recording session, I close it down. And typically when you close down Zoom, this little window pops up because it transcodes or does something to your video, and that didn't happen. And that is the worst feeling because that's when you know you forgot to hit the record button. So time is a little bit away from me from right now. Now, lucky you that this is take number two. So I know exactly what happened today on the market. I know exactly what happened. Now, I can't explain why our market is higher. I thought we'd have a red day, but I'll go through that or my thinking in that in a second or so. Before we talk about the agenda, actually, do I have to talk about the agenda? No. I do have a top 5 stocks of the day, and funnily enough, the stock of the day, I have not recorded a standalone video on the stock of the day, but I did a standalone video on the company coming in at number 2, which is Xero, but that is not the stock of the day. So the title of this particular standalone video is simply, is Xero a high quality company? And the reason I've done this video is because, firstly, Xero released full year results today. And because I am a shareholder of the company, very interested in their results. And whenever I see results like this, or whenever I'm looking at a company like Xero, I ask myself the question, is such and such a high quality company? In fact, I'm doing this to about 5 companies a day that are listed on the NASDAQ or New York Stock Exchange. I'm asking this exact question for all these companies. Is such and such company a high quality company? So I thought, why not just do a video on it? Why not do more videos of me asking this question? I think I might be doing more of these videos moving forward. So anyway, so that's a standalone video, about 19 minutes worth for Xero. And that's companies in the top 5 stocks alongside Graincorp, alongside Navigator Global Investments or something, alongside NWR Holdings, and also alongside Treasury Wines. Okay, and then after I've gone through the top 5 stocks, I might answer, or not answer, I might reply to Michael's comment again. Yes, again. Okay, now on to the ASX today. And the first thing I thought about when I saw what happened on the ASX today was, the first question I thought was, why has our market rallied? And we can see the market, the XJO, XAO, and even the tech markets or indices or sectors all rallied today. In fact, if you have a look at this little graph here, tech rallied all through the day. XAO and XJO rallied to about 1, 2 p.m. and then went sideways during the rest of the day. And I was thinking, more than likely, the reasons why we saw a bit of a rally on our market today was because either American futures are up, they're not. Yep, they're down, in fact. Down, they're in the red. And I had a look at that. And then I thought, well, if the American futures are down, probably a good chance that the Asian markets had a really good day. So I had a look at the Nikkei and the Hang Seng. No, they're down. In fact, the Nikkei is down almost 1%. Hang Seng's down at 0.8%. And then I went to Trading Economics, and there is the lead headline, Asia markets fall as rally stalls. Not the Australian market. We had a pretty good day, relatively speaking. We saw a little blurb here about Australia 10-year bond yields hits 4-month high. That explains why the real estate sector had a bad day. I'll talk about that a little bit more. But Australian employment hits fresh peak. Employment in Australia surged by 89,000 in April to a new record of 14.64 million, far surpassing market expectations of whatever it was, 20,000 gain. Yeah, so four times the expectations. And I'm just wondering, a really good month compared to what we've seen in the last year. And I'm just wondering if that sort of announcement of a more robust labour market was a reason not only our market rallied, but also why the banking sector rallied. Although I did not think of that when I first saw this, because I had no idea the banking sector rallied today, but it did. The banking sector had a really good day today. Anyway, so, and also should mention here, this is going to be interesting because we do see a fairly robust labour market. We also saw, what did we see the other day? We saw something the other day that, nice increase in wages as well. And I'm wondering that the expectations of an interest rate cut next week may not be met. There's a nice little question from VBEd, which I'll answer on Saturday in regards to interest rates cuts. But I'm just wondering if the RBA now is second thinking whether they should cut interest rates, because we have a nice robust labour market, increasing wages, and if they decrease interest rates, that could fuel more higher inflation. And I don't think that's what they want. So they have two mandates: price control, so inflation, and they also have full employment. And I think the labour market is, I don't know if it's full employment, but it's very close. So they're going to be focused more on inflation, keeping that in check, than really focusing on the labour market. So I'm just wondering if these expectations of interest rates being dropped, even being dropped 5 times in the next year, I'm wondering if that's well overblown. And the other thing here was, going back to it, Australian 10-year bond yield hits 4-month high. So what is the bond market thinking? They're not thinking 5 rate cuts moving forward. They're thinking, good employment, or good economy, that sort of thing. Okay, so back to the ASX today. So IT had a good day. Financials, a really good day. Good day for banking, up 1.27%. The indice, the sector up 1.14%. A really negative day for real estate. And when I went through and when I went through this the first time, I just assumed Goodman Group was down a lot. It was not. And as soon as I open it up, real estate sector, and it all clicked. So if we go to all these companies by market cap, they're all down except for Charter Hall Group. And then it just clicked for me. Oh, bond yields are up. So if bond yields are going higher, share prices of these companies should be going lower. There should be an inverse relationship between those two things: rising interest rates or bond yields and share prices of REITs. They're negatively correlated. So it all makes sense to me as soon as I open this up. Anyway, so if I forgot to mention that I did a take number 1, I could have looked really smart right then. The other thing is discretionary up 0.96%. I also had a look at that. I wasn't sure what happened there, but there are 2 big companies in discretionary. Those 2 big companies are Wesfarmers and Aristocrat. And they are by far the 2 biggest companies in discretionary. In fact, Wesfarmers is significantly bigger than Aristocrat. So if you have a look at these companies by market cap, so Wesfarmers has a market cap of 94.2 billion, Aristocrat has a market cap of 40 billion, and then the Lottery Corporation, coming in number 3, has a market cap of 11.6 billion. So really, the way Wesfarmers and Aristocrat go, the way discretionary goes, and Wesfarmers and Aristocrat had a pretty good day. Yesterday, Aristocrat had a bad day, and I'm pretty sure discretionary had a pretty bad day as well. Okay, so I won't have a look at the ASX 20 again. Banks had a really good day. Mining had a bad day. So the usual suspects up, usual suspects down in that regard. So the 4 major banks had a good day. The only thing I did mention let's open it up. Why not? Do a little bit of a repeat. The only thing I thought of when I was going through this list of companies is CBA up 1.34%, CSL down 0.6%. The P ratio of CSL is now the same as CBA, which is highly unusual. I don't think we've ever seen that. Typically, the P ratio of CSL is double or more than double that of CBA. And I think we're in very unusual times right now when people are more willing to buy CBA than CSL, even though CSL is going to be a significantly bigger company than it is right now. And CBA, I don't think you can say that. I think it'll be slightly bigger, but not significantly bigger. And so it's really unusual to see the valuation of CSL or any valuation metrics lower than CBA. So it just shows you that the market can be irrational at times. Share price of CBA up 1.34% today, even though it is significantly overvalued. Now, I have joken that it is the most overvalued company in history. I do joke about that, but if share price keeps on rising, that won't be a joke anymore. Okay, so let's have a look at the top gainers and top losers. And again, this is not going to be surprising. It's funny because as soon as I saw peak rare earths up 158%, that did pique my interest. And then I had a look at why the share price had rallied. There's a takeover bit, so we can move on. Amplia Therapeutics. This one did cause me to write down this company's ticker code because they did announce that something they're doing beats chemotherapy. And I'm also always going to be interested in an announcement like this. Accent trial achieves superiority over chemotherapy alone. So I have no idea about this company. I have heard about it, but I've never looked at it. I don't think they have any cash flow. They're not selling anything. So they are a storage stock. And I'm just going to confirm. No receipts. So they are a storage stock. I don't even know how big they are. So let's have a look at ATX. I'm assuming 50 million, 27.16 million. But I'm always going to have a look at this sort of announcement because it just sounds so good. I like it. Achieves superiority over chemotherapy alone. And then I look at the chart and the chart does nothing for me, unfortunately. Nice little pop-up in the chart today. Let's go have a look. Nice little pop-up in the chart. Really good volume coming through as well. Really good volume. But the share price went to a high of 9.8 cents today. And it closed at 7 cents. And why did we see so much selling in Amplia Therapeutics? It's because, look where the share price was about 9 months ago. Significantly higher prices. So all those shareholders now underwater who bought at higher prices, they want to get out. And when they saw the share price rising today, getting to a high of 9.8 cents, they saw their opportunity. So we saw a lot of selling coming on and not enough buying, not enough enthusiasm to meet those sellers. And when that happens, the share price falls. And that is what we have seen today. So this sort of buying and selling, or this sort of candlestick on a day like today, tells us that the enthusiasm of the sellers was overwhelming the enthusiasm of the buyers, which is telling me that the announcement was not quite powerful enough. Now, if this was a profit upgrade and a significant profit upgrade, this would have been a green candlestick and it would have been a really good day. But Amplia Therapeutics, I think one to have a look at, just have a look at this announcement. How long are they away from any sort of revenue? It could be decades away. I don't know. So that's Amplia. So I did have a look at Amplia, and let's go back here. EDU Holdings, really interesting one, this one, because last night they announced that they are delisting from the ASX. And typically, if a company delists from the ASX, share price will go down. But in this case, the share price has gone up. I believe they're doing a buyback of anyone who doesn't want to keep on holding their shares. The other thing is that did impress me about EDU Holdings, and this is, I'm being a little bit facetious, if I'm using that word in the right way, about this one, is because typically when a company delists, they will make some explanation why. And always, the first explanation is the market doesn't appreciate us, it undervalues us. EDU did not mention a word of that. They just said illiquidity, regulatory challenges, and administrative costs. Nothing about valuation. Anyway, so I'm not going to spend any more time on EDU Holdings. That's about it. And I think that'll be the last time I even mention this company. I think that's it. Oh, there was Brightstar Resources. Share price up 15.6% on pretty good turnover. Yes, I do remember this one as well. And I also wrote down the ticker because just the title of this announcement, May production update, processing underway. And that seems to me that this company is in production. But is it a company just newly in production? Maybe. It just says processing underway. I'm always interested in a mining company that has just moved into production. I'm always going to have a little bit more interest in that sort of company because they're generating revenue, possibly even cash flow. And I'm more interested in those sort of companies. It's less of a story stock and more of a real company. And then I had a look at a chart for this one, and I can't remember what it looked like, by the way. Bright Star Resources. And this is probably why, although, so it's slightly moving up. Yeah, you can't, since 2023, when the share price was 25 cents. So share price has more than doubled since then. But look at the volume. Look at the increase in volume. And today was the best day when it comes to volume of this company. I do like that volume profile. A nice increase in volume over time. That is telling me something. So that's probably one of the reasons why I did write down BTR on my to-do list. I have a little to-do list. Have a closer look at ATX and BTR. I think that's it. Yep, I think that's it. And top gainers by market cap. I don't remember anything here. Yes, that's right, because Graincorp, top 5 stocks. Navigator Global, top 5 stocks. I mentioned Main Pharma yesterday. There is a takeover bid for that company. Share price dropped a fair bit. So I thought maybe the takeover bid has been withdrawn. No, it was something else. And that's why the share price is up 11.2%. It's just something else. So we can move on because there is a takeover bid. I have no interest in companies who are under a takeover bid. And yep, I think that was it. I think I even said after those first 3 companies, nothing much going on. Okay, top losers. Oh, I don't think there was anything here. I remember mentioning as I went through this, now we don't see the company, but when we have a look at the top losers by market cap, there is going to be one company at the top of this list, and that company is NWR Holdings. So there it is, NRW Holdings. Share price down 8.3%. Top 5 stocks of the day. You're also going to see a fair few gold companies here. Yep, because gold had a pretty bad day. And for some reason, when gold has a bad day, Serco also has a bad day. But look at the turnover, $31. Mika Metals, which I do own. I did have a look at Black Cat Syndicate chart. Let's do that again, because this is a nice. This chart is making me think. So the beautiful uptrend. So high highs, higher lows. So if you have a look at all the troughs and just line all the troughs up, you notice that each trough is higher than the previous one. Higher, 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 higher. Now this high is a little bit lower than the previous low, or this low is a little bit lower than previous low, and it's at a very similar level than the low before it. In fact, right there, if you put a line right there for Black Cat Syndicate, that's an important level. The reason that's an important level is if we go back to December 2024, you can see the share price went on a nice little rally, then there was a pullback. The next rally didn't break through that level, and there's a pullback. And then when it broke through that level, share price went on a run, and then we saw the pullback back to that level. And so that's about 76 cents. So that's an important level for Black Cat Syndicate. And if the share price falls below that, there is a chance that sentiment is starting to shift from positive to negative. Maybe it's already shifting, and the trend is looking like it might be shifting as well. Okay, so I think that was about it. Oh, Paradigm Pharmaceutical, share price down 7%. This was another interesting one because I actually asked ChatGPT in the video, see if I can find it again. Here it is. No, that's the announcement. Oh, I don't even have ChatGPT up. I even asked in the video, I put the announcement into ChatGPT because I was saying that if you have a look at the announcement, Paradigm receives US ethics approval for phase 3, and I was thinking that looks positive. So why is the share price down? So I did ask ChatGPT that very question, and the first thing it mentions is, despite the seemingly positive announcement, the share price is down. It gave me, it gave me a list of reasons. I wasn't a big fan of the reasons, but that's fair enough. So, for instance, broader market context of profit taking, sentiment fatigue and past delays, cash burn concerns. I just think it wasn't the It just wasn't the type of announcement, strong enough announcement that could see the share price take off again. And the reason I say that is if you have a look at the chart for Paradigm, we are seeing a bit of weakness here. We are seeing a bit of weakness. And the reason I say that is, come on. So we have seen the share price drop a lot. And today we saw the share price open up on open. Share price, yeah, was higher on open, and we saw some selling coming in. Now, if the announcement was strong enough, that selling there would have been enough buying to overcome the selling, but there wasn't enough buying because, again, I don't think it was a strong enough announcement. So there was a bit of selling pressure. And the reason there was selling pressure, look where the share price was in the past, much higher levels. So there are shareholders underwater and they want to get out of this dog stock. Simple as that. Mentality. It's just psychology of the shareholder. Psychology. They think it's a dog stock because don't forget, most shareholders, when they buy shares in a company, expect the share price to go higher from that point. And when it goes lower, oh, it's a dog stock. It's not my problem. It's not my fault. It's a company's fault. They're a dog stock. Okay, I think that was it because as I went down this list, there was nothing that really drew me in. Now, there was a few companies that did not make it in the top 5 stocks, and I went through these companies fairly briefly, fairly quickly. So Aurora Limited up slightly on an investor update. Can have a look at the chart for this one. It's not the sexiest company in the history. In fact, even the chart looks pretty crap. So we can move on to the next one. Xero, already mentioned Main Pharma, Paradigm. IAG is getting into partnership with something in WA. Enter strategic alliance with RACWA. The market likes it. Share price up 5.7%. And even the chart looks a little bit better. IAG, it's getting back up to the levels it was before the big drop, share price drop, when they released results on the 13th of February. So nice little turnaround. That could have been for IAG a trend killer event. So I'm going to put this into my trend killer watch list. It's not there. This is a failed trend killer selling event. So on the 13th of February, share price dropped 12.6%, and the share price is now higher. IAG and AVA Risk Group, second nice contract win in a few days. The first one didn't really do much, share price only up 1%. And we've just seen the second contract to supply detection systems win in 2 days or 3 days. First one was in India. This one is in Abu Dhabi. So if they continue to release these sort of announcements, now I've mentioned this in the past, one of these contract wins in isolation, whatever. But if the company gets or announces a series of these contract wins, that's so much better. So this is the second one in a few days. And if we see a third one, ooh, good times ahead for AVA Risk Group. Unfortunately, the chart is a no-go zone for me at this point in time. Now, it might change, but at this point in time, it's a no-go zone. Okay, now on to the top 5 stocks of the day. And lucky us, I've gone through this in the past. Now, when I did the first take, I said, I have to finish this in 10 minutes. It took me 15. So let's see how quick I can do this now. So Treasury Wines coming in number 5, share price down 5.15%. Sam Fisher to succeed Tim Ford as CEO of Treasury Wines. I think they already, sort of implied or announced that there was this succession going on when it comes to CEO. And Sam Fisher was a part of this committee or whatever. And I'm thinking, if the market knew Tim Ford was leaving as a CEO, the market is not certain that Sam Fisher is the right hire because the share price is down 5.15%. If the market liked the hire or loved the hire, the share price would be probably up a fair bit. Now, one of the reasons why I'm interested in Treasury Wines is not because I like the company, is just where the chart is or the share price is in historical levels. So if you go back prior to 2019, beautiful uptrend, but for about 4 years, share price went from $4 to $20. So even in companies like this, which I don't have the highest regard for, you can see periods where the share price goes on beautiful runs. Now, the only reason I'm talking about Treasury Wine right now, I don't really care about the announcement. It's just where the share price is. So back in COVID-19, share price of Treasury wines fell to about 8.20, 8.30. Now, just after Australian wines were hit with Chinese tariffs, the share price of Treasury wines fell to, you guessed it, between about 8.20 and 8.30. And just a few weeks ago, the share price of Treasury wines fell to, you guessed it, 8.20, 8.24 in fact. And so share price of Treasury wines is at an interesting level right now that I do think there's a bit of support here. And I do think a lot of investors would be saying, oh, the share price of Treasury wines is a similar level that it was back in 2020. Maybe it's a buy. Maybe it's a buy. I might do a video titled, Is Treasury Wines a High Quality Company? And you might be surprised by what I think about this company. Or you might not be, because I've sort of given it away. Anyway, so I might do a video on that. Is Treasury Wines a high quality company? And if it's not, I'll just be trading it. And this could be a nice little trade here because it's at an historical support level. Okay, coming in number 2, or no, what are we up to? 4, we have NWH. I always want to say NWR Holdings. NRW Holdings, ticker NWH. I always get it confused. And I just mix up the letters as well. They released announcements that they are responding to proposed South Australia government waiala legislation. Now, I opened up this announcement because I knew this was going to be imported, and it was just too long. I just gave up. I just don't have the mental capacity to go through all this. It was just too long. So I thought, let's just put it to ChatGPT, which is exactly what I did. Ooh, I do have it here. This is it. Yes, I put it in. I just copy and paste the whole article. That's it. And it just summarized, ChatGPT summarized it, and also told me why this is bad for NRW Holdings. Implications for NRW. If the bill passes as described, so there's some sort of bill in regards to the South Australian government, the company may lose its ability to recover $113.3 million, and there'll also be an impairment charge. Now, I don't really care about the impairment charge because that's a one-off. It's a one-off. I don't really care about that sort of thing. And NRW sees this government action as unprecedented, undermining legal due process in investor certainty. So a really nice overview from ChatGPT on this particular announcement. Yeah, key background facts, legal legislative complications, proposed government bill escalates risk, implications for the company's response, financial strategic takeaways, factor impact, investor consideration. Beautiful. I'm liking ChatGPT more and more, but it's not perfect. It's not perfect at all. Okay, so that's NRW Holdings. Now let's have a look at the chart. This is where it became really interesting because I wasn't really following what happened with this company on open because I was busy, of course. But then I had a look at this chart and went, oh, geez, on open or near open, the share price of this company was down about 20%. Yes, 20%, and only closed down 8.28%. So we saw a lot of buying today. So this is the opposite of when we see a company share price actually drop during the day after a release announcement. In this case, we saw a lot of buying coming in, and there was not enough sellers. So if you see a lot more sellers than buyers, the share price is going to rise. It's natural. It's just buying. It's just supply and demand and supply. And yeah, so unfortunately, there was someone out there, quite a few people out there, who sold on open, and that was almost the low. In fact, the low was within the first 2 minutes. And then we saw a massive run in the share price. And this is another reason why I very rarely buy or sell on open, because sometimes you're just going to get it wrong. So someone sold NWR Holdings at $2.21 today, and the share price closed at $2.66. So if you bought at $2.21, you're already up 20%. Yes, you're already up 20% if you bought on open this today, or not on open, but near the low. Anyway, that's NRW Holdings coming in at number 4. Now on to some good news. Navigator Global Investments. And I like their announcement title. Navigator Global upgrades financial year 25 earnings outlook. Compare this title to the company coming in number 1. We know that there's an upgrade. And I knew as soon as I saw this, the share price of Navigator Global is going to rise today because this is exactly what I'm looking for. Upgrades. It's an upgrade. Now, a lot of times when a company does release an upgrade, all they need is one line. That's all you need. I've seen that plenty of times before. Navigator went over and above that. Upgrade financial year 25 earnings outlook, adjusted EBITDA up 17 to 22%, but nowhere near as, in terms of wordiness or words, nowhere near as verbose, if that I can use that for a letter or announcement, as say NWR Holdings announcement. Or if this was a downgrade, I reckon there would be like 5 or 6 pages trying to explain that sort of thing. So let's have a look at the chart. And this is where it gets interesting, because whenever I see an upgrade, I'm thinking, ooh, this could be a breakout. And if it's a breakout, it could be a sneaky buy, or maybe not a sneaky buy, but it could be a buy. And then I saw this chart and I went, no. Now, I do remember following this company for a brief period, start of first half of 2024. Share price was in a nice uptrend, and then since then, nothing much. Yeah, I've no interest in this chart. So sorry, Navigator, but in terms of your title, your announcement title, really good title. You put the word upgrade in there. Just compare this one to the company coming in number 1. Anyway, so on to Xero, company coming in number 2. Also did a standalone video on this one. Xero released their full-year results. Share price up almost 5%. It was up over 5% for most of the day. Yeah, so this was a brilliant full year from the company. There's no complaints from me as a shareholder, and really good growth. If I can get my mouse to start working. Why is my mouse not rolling up and down? There it goes. So 23% growth in revenue. Now, over the last 10 years, Xero has grown their revenue at 33% per year. So even though we fully expect a company that is growing and growing and growing, we're going to eventually see the percentage change in revenue go down. So we fully expect this. But for Xero to be growing their revenue at 23% per year is fantastic. Now, subscribers are only growing at 6%, but that's okay because average revenue per user is going up. So I went through this in my standalone video. So pretty good numbers here for Xero, and I have no complaints at all as a shareholder. Now, the chart itself looks pretty good. Now, I think, and I think I mentioned this in the first video, I forgot to go through the chart in the standalone. The daily chart looks really good. Share price as low as $136 on 7th of April, sorry. So share price has bounced not quite 50%, but it's getting there. This is in my long-term portfolio. I didn't even know the share price fell to that low. This is a company I'm holding for the longer term. I would not consider Xero to be high quality just yet, but it has a potential to. But if you have a look at the weekly chart, it's a high quality chart. This is a characteristic, or this is the chart you would see for a high quality company. Share price up over time. Now, I still remember when this company listed back in 2012, late 2012, and the first year this company was on the ASX, this was a beloved, this was so hyped up. It was a 10-bagger. Share price went from like $4 to $40, and then share price then pulled back from $40 back down to $14. So there's a lot of interest in this company, but back then this company was not profitable, but they were growing like nothing else. And the company has grown their revenue from 120 million to over $2 billion in 10 years. That is the sort of growth I'm looking for. So if you want to learn a little bit more about whether I think this company is high quality or not, just wait out for my standalone video on Xero. Is Xero a high quality company? Okay, coming in at number 1, the stock of the day is Graincorp. Now, I'm probably being a little bit unfair on Graincorp because I was going to say compare this company's announcement to Navigator. So focusing on, because Graincorp also released half-year results. But anyway, the title of their announcement, their media release was Graincorp first half 2025 results and updated earnings guidance. Now, if they ask me, they should have replaced the word updated with upgraded. They were so close to getting it right. It should be Graincorp results and upgraded earnings guidance. They were so close to getting that right. Now, I might be seeming a little bit semantic there, but little things like that make a difference. Because if you're a shareholder of Graincorp, this might seem stupid, and you saw that announcement, you just don't know it's an upgrade or downgrade. And whenever I see the word upgraded earnings, I am way more keener to open up the announcement. So sometimes you don't even have any clue. There might be some guidance change in an announcement. I've seen that a few times. No, not even any mention of a change in guidance in the title of announcement. So in my opinion, if you have really good news, put it in the title. It makes a small difference, but I think it's a big difference. That's contradictory. Anyway, so I had no idea if this was an upgrade, downgrade, but then financial year 25 earnings guidance upgraded. They use the right word. So EBITDA of 285 to 325, underlying profit 65 to 95 million. I also had a look at the P ratio of this company based off their expected profit. It still has a P ratio above 20, even if they get 95 million, I think. Yeah, so even if they do achieve their guidance, P ratio for this type of company is a little bit too rich for me. But a good half year from Graincorp. And the other thing I should also mention is there are a lot of variables at play that could see this company miss their guidance. And they actually mention it here somewhere. Here it is. So the upgraded guidance remains subject to a range of variables, including second half grain volumes, timing and volume of grain exports, supply chain margins, oilseed crush margins, and new season opportunities in Q4. And a lot of that is dependent on weather as well. So I'm not sure. I mean, they talk about weather elsewhere in the announcement, but sometimes you just don't know what's going to happen with the weather. Weather could be very unfavorable for them, and that could lead to them actually issuing a downgrade. Just don't know. And that's the whole reason why I'm not a big fan of agricultural companies, because the financial performance of these type of companies is really out of control of the management, because they can't control the weather. If they could control the weather, they can't control pests. Well, sometimes they can, but sometimes they can't, like diseases, that sort of thing. So anyway, Graincorp. Now, I'm not going to do a video on whether or not Graincorp is a high-quality company, because it's an obvious answer. And the reason I say obvious answer is if you just have a look at the weekly chart for this company, and if we go back 25 years, from between 2001 and 2021, share price just went sideways. For 20 years, the share price went sideways. And then all of a sudden, between 2020 or 2021 and 2022, in a 1 year period, the share price went from $4 up to $10. And since then, it's gone nowhere. So you could have been holding this company for 25 years, seen no return at all. No, you could have been holding this company for 20 years, saw no rise in the share price. All you got was the dividend yield. Then you sold it in 2021 at $4, and then you saw the share price go from $4 up to $10. You saw the share price become a 2.5 bagger in a fairly short period of time. This is not the chart of a high quality company. This is a chart of a company that, yeah, it doesn't grow, doesn't do much. Okay, so that's Graincorp coming in. Oh, it is number one. It is the stock of the day. Last thing I'm just going to talk about is from Michael, a comment. I note of late you have not been doing charts on companies in Breakout. 360 or Live 360 meets your criteria. Please do some live videos when you're away. Love your videos. Love your name, Michael. Let's have a look at Live 360. And this is, well, my favorite type of breakout is when a share price of a company is going sideways or has been decreasing, and the decrease in the share price is sort of slowing down. So the slope is getting short, narrower, whatever, not steeper, the opposite of steeper. And I love it when that's happening, share price going sideways, and the company releases something really positive, and then you see share price just pop up. That's my favorite sort of breakout. That is a breakout. That is the thing I'm looking for. I would not necessarily call this a breakout. It's sort of a reconfirmation of the uptrend, reconfirmation of the positive sentiment in this company. And the chart just looks brilliant. It's still in an uptrend. We saw a little bit of weakness because of what was happening with the tariffs. And we have seen the share price of this company just take off since then. So, and Oh, ooh, 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 ooh. So even though I just mentioned this is not my favorite type of breakout, I did buy Live 360, trade Live 360 on the 1st of March 2024, because this is the breakout I'm looking for. This is what I'm looking for. So you can see the share price in a nice uptrend from May 2023 through to August 2023. The share price went sideways or even down a little bit. So not much movement. And then the share price going sideways in January, February of 2024. And then all of a sudden the company released quarter results and it was spectacular. Share price popped up 38.5% on that day. Massive volume came in. This is the breakout I am looking for. So not quite the same as this one, because I've already seen a fair bit of positive momentum in the company, but it's still a brilliant looking chart. And by the way, some people would say to me, no, you're too late. So I did buy on that day. You're too late. You're too late. You've already missed the price rise. So I bought at, I think it was like $10.50 or something like that. And share price more than doubled since. Share price has tripled since then. Yeah, so you're not always too late when you see this price rise. And I've heard that from experts who have said you have to be in the company before the share price breaks out like this. You have to be, because then otherwise you're too late and you've missed the share price rise. Hopefully this is proof that no, you're not too late. It doesn't always work out like this, but in a lot of times it will work out like this. When the company releases a really positive announcement like this, a lot of times it takes a while for the market to digest that news, and there's an increasing chance that when a company releases more results or more updates in the future, they're going to be positive. Okay, that's all I have for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.